those non-consensus bets or decisions, are you mostly looking at the data? Are you mostly trusting your gut? I'm sure it's a combination, but internally, how are you rationalizing these decisions?
I think it's internal conviction, and I don't know where that comes from, but I'll give you a few examples. I mentioned we acquired a company called Stuzo in the beginning of this year. Stuzo does a little bit of what we do in the convenience store market. And at this time, our company was kicking butt. Our growth hasn't decelerated in 2 years in a row. We're probably the only software company, public software company, that hasn't had any deceleration in growth during the last 2 years. And so when we did this, investors were like, what the hell are you doing? This is scope creep. You're going into convenience stores. All you do is sell to restaurants. And by then, the data had gotten me convicted that more customers were eating at convenience stores than we realized. And so I sort of saw that data. And then I kind of had this conviction that if we could empower those customers with the technology we have, we could build a new vertical, a new TAM at par, if you will. And then it became down to like, can the team do it? And I sort of obsessed and said, can we do it? Can we do it? And we did it. And like I said, we had to sell our stock at a 9% discount, which is really painful. You can imagine what our shareholders thought about that. But fast forward, the stock's doubled. And I think a lot of part reasons doubled is because we kind of proved it out. And by the way, for the last 3 or 4 months, every single article in our trade rag is like convenience stores and new restaurants, convenience stores and new restaurants. And guess what? Where we were situated really well. I'll give you another one that's I think was really controversial and really hard. When Chairman Powell made that comment of inflation is transitory, before that, I'd been looking at the data at our customers and seeing that the menu prices of the customers that we sold to were going up pretty meaningfully, and it got on month after month after month. And it really freaked me out because restaurants get hurt by inflation pretty meaningfully, and markets are going to crash. And SaaS stocks were still kind of trading at multiples that in my mind didn't make sense. And our stock was sort of like the high 50s or $60 or something like that. And so we were down from a COVID high, which made no sense already. But investors were like, oh, well, during COVID you were here, and now you're here, so you're cheap. And so I went to our board and said, hey, I'm going to do something that's going to be super non-consensus. We are going to refinance our debt, and we're going to raise equity and put cash on the balance sheet because I feel really convicted that inflation is here, and that's going to mean for rates. And as a result, the growth stocks are the ones that are going to hit the most, and we're going to get slammed. And we did it, and our stock went down 14%. Now, I don't know if anyone, when you're running a company, your stock goes down 14% one day, like it is brutal. And I remember being screamed at by our shareholders, like you wouldn't believe. I remember even the board questioning me, like, hey, someone be like, hey, are you sure it's the right thing? Looking back, was the greatest thing we ever did because we armed our balance sheet before SaaS stocks went down 50% after that. And we were in a tough spot. We ended up being in a position of strength. We didn't have to worry about our balance sheet. We could still be acquisitive and kind of push on the things that mattered for us. And so it's another example of, it was the data, but I think in the end, you got to have a lot of conviction to go against your advisors, go against your potentially people on your board, and but most importantly, dealing with those that care a lot about the short term when you're focused on the long term.